Hello, everyone. Thank you for tuning in to another session of Export Week. This is a quick reminder that you can go to marketfinder.thinkwithgoogle.com and download an export report. All you have to do is enter your website URL, and then Google will pull your top recommended markets, and you'll be able to explore a variety of reliable data about those markets. Thank you, and please enjoy the session.
Good morning and welcome. It's really a great pleasure for me to share with you on just a few topics around this subject of payments as it relates to Africa. And let me start by, first of all, just looking at the payments landscape in Africa. The payments landscape in Africa is fast evolving. And there are several things that need to be considered, especially when you are doing business in Africa and you want to be successful. When it comes to payments, there are several things that you must pay attention to. The first thing that comes into mind is security. When you're making payments, you want to make sure that the person that you're going to pay on the other side receives the value. Number two, he receives the correct value, and he also receives it within time. And therefore, security is very, very important when it comes to making payments. The second thing that we talk about is operational efficiency. It's one thing to make a payment, but we have seen payments being made and they take days, if not weeks, before the beneficiary gets value. And many times, actually, the beneficiary doesn't get the money, and then there's back and forth, and meanwhile, your goods are stuck, you cannot progress, you cannot do what you wanted to do because there's been an operational failure. And therefore, operational efficiency is absolutely critical. The other thing that is very important is reducing processing times. So you are selling goods, you are either exporting or you're importing a commodity or something, and at the end of the day, you want to be able to do your business. So you want to make sure that the time taken to making payments is reduced. Not only getting reduced in terms of time, but also you need to make sure that the transaction costs are also lowered so that it doesn't become pricey, because when it's too expensive, then it ends up adding into the cost of your product. And then, of course, there are many other things that come into place. You want to make sure that you've got control. You are looking at whether your accounts are locally or you're dealing with accounts that are offshore. If you are dealing with another counterparty who speaks a different language, then the language of communication becomes very important. And these are all things that you have to take into consideration if you are doing business in Africa and you're making payments. Now, there are also a lot of things that are happening that we have watched out here in the African continent. And the first one is mobile. Mobile has become a very, very important tool when it comes to making payments. Everybody is holding a mobile phone. More and more Africans are getting all of mobile phone. And therefore, a lot of payment transactions is now happening over the mobile phone as opposed to the traditional banking channels. The whole idea around a paperless environment is also now become the normal. Before, you would write a letter to the bank and you send it and ask them to process a payment. Now, we are all talking about paperless. Everything that's being done with the bank is all paperless. And then another third component, which is very important when you look at what's happening in Africa, is the whole issue around integration. You want to make sure that if you're doing many payments at a time, you don't want to be going in there and creating a payment instruction by instruction. You want to be able to possibly integrate with the accounting system that you're using so that you can be able to just upload those payment files and then send them over to the bank for processing. And of course, that introduces controls. You want to make sure that, when it comes to the bank, it's straight through processing is happening, because when all these things happen, they end up contributing to the whole idea around reducing cost, reducing processing time, and making payments efficient here in Africa. And so those are just some of the few things to have in the back of your mind if you're doing trade in Africa or you're doing business here. That is what's happening in the continent. Now, let me just take it a little bit step further. And let's just try to define it, because many times when we talk about payment, it's a wide topic. But what exactly is a payment? I think in a very simple way, a payment is really a movement of funds from one location to another. You are sitting in one part of in one country, you are trying to move money to another person in another country. That can be considered a payment. It could also be you are moving money, from one person to another. That also can be considered a payment. So in simplicity, when we take it very simple, that's really what you define as a payment. And then we also talk about remittance. A remittance of funds in local or foreign currency from one party to another using the banking system or even alternative systems, that all can be considered as payments. We can also look at it as just money transfer, where money transfer is basically a basic service for customers who, for private or business reasons, request that a statement of money be moved from one party to another. And then you can also look at it as a transfer, that the transfer business represents the movement of money to settle customers' financial obligations. I know you have tried to really define what a payment is and try to make it as simple as possible, but that's really what a payment is. And traditionally, the payment service has been provided by banks for a long, long time. Banks continue to do this, even though we are now recently seeing a lot of fintechs coming in and beginning to offer payment services in this space. And I think that can only be expected to grow as we move forward. Now let's take again, in this slide, I want to look at just a few things that we must consider when we are making payment. And remember, look at it here from a business point of view. You are in a particular business, you're either in the hotel industry, or you're a trader, or you're in the transport business, and you now need to make a payment. What are some of the things that you should consider? I think the first thing that should come into your mind is, how quick can I make this payment? How quickly is it could be made? The speed of transfer is very, very important. The other thing that comes into mind is accuracy. I talked about that in the first slide when I was just introducing this subject. Accuracy. You want to make sure that the right amount is transferred to the right beneficiary. You can transfer the right amount, but it ends up in somebody else's account. But you want to make sure that the money is transferred right to the person that needs to be paid. And then the other thing that's so important is personal service. You want to make sure that, there's the service that you're getting for the, when you are doing your payment is actually personalized. I think that is, that's of great importance. Value date. You're making a payment, but when must it be able to reach the beneficiary? You are firstly exporting. The beneficiary expects the payment to reach him at a particular time. So value dating is very, very important. The other thing that comes into mind is, of course, the currency. What currency do you want to transfer? You may be trading cross-border. That means you are in one country, doing business in another country, and therefore the currency involved is also very, very important. And then, of course, another thing is the global branch or correspondent banking network. I'll talk about this later on, because when you are moving money, there's a very, very basic principle. If you are paying in local currency, for example, let me use the Nigerian naira. The Nigerian naira is the currency of Nigeria. That means the government of Nigeria is the one that issues that currency, and the Central Bank of Nigeria is the primary clearer of the Nigerian naira. If it is a Kenya shilling transaction, then Kenya shillings is the currency of Kenya. And therefore, the Central Bank of Kenya is the person that's primarily responsible for clearing and settling the Kenyan shilling. If it's dollar, then the dollar is the currency of the United States of America. And therefore, if it's a dollar payment that you're going to make, then the Federal Reserve Bank is the one that's responsible for ensuring that that settlement happens, or the settlement process for that currency happens. So for you to be able to move money around the globe or around different countries, then it's important to understand you're going to use a number of banks along the way for that payment to be able to reach the beneficiary. And I'll talk about that later on. And then also another thing that is important when you are dealing with payments is to understand that payments is risky. Those of us who have been in the banking industry for long and have been in the industry for quite a while right now, one of the things that worries us all a lot is always about criminal misuse. If there's fraud or compromise, it happens when it comes to doing payments, because criminals want to take advantage of the process of payment, of making payments, to make sure that that money ends up with them and not where you want it to go. And then also, of course, the loss recovery capability. When you're making a payment, you also want to think about, should something go wrong, am I able to recover the money? Can I recover that money? And of course, convenience. I talked about that earlier. Convenience. How easy is it for you to be able to make that payment, across for the beneficiary to be able to get the value? Then let me look at something else that's so important. The mode of delivery of payment instruction is very, very important. And again, this is an area that we have seen a lot of change. In the past, all you needed to do to make a payment was to, take a letter or go to the bank, take out a funds transfer instruction form and fill it and give it to the person at the reception or the counter, and you go, to your home or office and expect that payment instruction to be done. That's what we call unstructured funds transfer. Sometimes you would actually just write a letter to the bank and, please take these as your instructions. to debit my account number this and transfer the funds to the following beneficiary. And you put all the details there, give that letter to the bank, and the bank would process that instruction, and the transfer is made. That's what we call unstructured funds transfer. But in the whole payment space, there's what we call structured funds transfer. And this is where instructions are formally formatted and processed by a direct handoff system from online banking systems. A lot of banks and financial institutions do provide this, where they give you a software, a connection, and you log in, and they actually give you pre-formatted fields, and you enter all this information. You get it approved within the company or within your corporation, and then you send that to the bank. It is received, and the instruction is actually made. I must say, this is now the most common method of payment that we see around. Now, let's just move on in this slide, and I want to just spend some time here to talk about the parties to cross-border payment. And I think it's important if you're doing business in Africa, and part of the reason why we are doing this series is to encourage more and more businesses to trade and for trade to move forward in Africa. But so we want you to make sure that you understand actually how payments happen. Now, who are the parties to a cross-border payment? Because this is important, especially if you are trading cross-border. Part of the whole idea around facilitating intra-Africa trade is for people to trade beyond borders. And therefore, it's important to understand the whole idea around cross-border payments and what happens and who are the parties that are involved. The first one is the ordering customer. The ordering customer, when it comes to a cross-border payment, is always the person that is initiating the payment. That's the person actually who is required, who has an obligation to be able to make the payment. The second person that is important in a cross-border payment process is what we call the ordering bank. The ordering bank always acts on behalf of the customer that is initiating the payment. And this could be your normal bank that you bank, where you have a banking relationship with, and that's where you present the payment instructions for the payment to be made. That is what we call the ordering bank. So if you're in Kenya, for example, it will always be the bank in Kenya that you use and that you do all your payments. If you're in Cameroon, it will be the bank in Cameroon which you normally use for your normal day-to-day banking instruction, where you present those instructions, where you present them with instructions to make payments. The third bank, that is the third party that's involved in a cross-border payment, is what we call the instructing bank. Now, if the originating bank does not have the necessary communication and the correspondent relationship, then they will contact another bank who will issue the instruction for the funds transfer. And I think it's important for me to explain this because I alluded to it when I talked about ensuring, when I was talking about the currencies involved. Let's take, for example, you are sitting in Nigeria and you want to make a payment to a bank in, let's say, in Cameroon for that case, and the payment instruction is in US dollar. Now, I say that the dollar is the currency of the United States of America. And therefore, for you to be able to make a dollar payment in Cameroon, you need to make sure that that payment is actually goes through a bank that participates in the dollar clearing system. It could be SWIFT or could be Fedwire. So if you're the bank in Nigeria and you are not a direct participant of the dollar clearing system in the United States, you then need to work through a bank that provides that service on your behalf. And there are many global banks that provide this service. You have got Citibank provide that service. You got Deutsche Bank, you got Bank of America, JP Morgan. These are all American banks in the US that are direct participants of the dollar clearing systems. And therefore the bank in Nigeria will then contact, this American bank that has got direct license to participate in the US dollar clearing system. And then it is that bank now that becomes the instructing bank. Okay, so it plays the role. It needs to be a member of the currency clearing system for the currency that is being instructed. So I hope you get that part, because it's important. It's the third component of a payment, a cross-border payment instruction. The fourth part is what we call the sending bank. The bank that sends the SWIFT message, i.e. the sender of the message. In practice, the ordering and the sending banks are often the same. The ordering and the sending bank are always often tend to be the same. But I think it's important just to understand here how this thing works. And then finally, you have the receiving bank. The bank which receives the SWIFT message, i.e. the receiver of the message. In this case, it's where the beneficiary maintains their account. So I think it's important to understand that the ordering customer, the ordering bank, the instructing bank, the sending bank, and the receiving bank, these are all parties to a cross-border payment instruction. And I think it's important for you to understand the role that each one plays there. Now, again, I must say, you don't have to be an expert in all these things, because the reason why banks are there is for them to make this process very seamless to, to their clients. So all you need to do is have a banking relationship, and the bank that you have a relationship with then takes care of all these things. Your job is just to give instructions, and the money moves, seamlessly to the person that needs to be paid. And I think it's important just for us to just have an appreciation of exactly what happens in this cross-border payments process. Now let's move again to the parties, to a transfer. I've talked about the previous slide. I've talked about the parties to a cross-border payment. Now I want to spend some time and talk about the parties to a transfer. Now there's what we call the sender's correspondent bank, the bank which provides cover on behalf of the sender, having an account relationship with the sender. It provides cover, i.e. the source of funds for the receiver or the receiver's correspondent bank. Okay, so I think it's important to understand that as the sender's correspondent bank is important to understand their role. Then you've got the receiver's correspondent bank, the bank at which the receiver obtains the funds from the sender. Remember, when you talk about cross-border payments, there's money moving, and each person has got a responsibility. There's the sender where the money originated, that's your bank account. And then your bank then got involved. And then your bank needs to move that money to a correspondent bank. If it's, for example, dollars I've explained. And then the correspondent bank needs to move that money to the beneficiary bank's correspondent bank as well. And then that final correspondent bank moves that money back finally to the beneficiary bank. Those are all parties that are involved in a transfer. And I think it's critical for you to understand the role that each one plays. Then you have got, of course, intermediary bank, which is a bank standing between the receiver of the message and the beneficiary's account with the bank. And this is where the money must pass through. And then you've got account with bank, and this is the bank at which the beneficiary will receive his funds. This is now the account, the bank where the beneficiary maintains his account. And then finally, you have the beneficiary. This is the ultimate recipient of the funds, or the final beneficiary. This is the person you're trading with. If you're selling goods if you're exporting goods to him, this is the person that actually who needs to receive the money. But you can see by the time the money leaves your account to the time when the money reaches the beneficiary, there are so many parties involved in that transfer. I think it's good for you to appreciate the role that each one plays, and also later on to appreciate what can go wrong in each of those steps, because when something goes wrong, then you need to be able to know exactly where did the failure point happen and what it takes for that remediation to be able to occur. Now, let me spend some time here again. I think you cannot talk about cross-border payments and not talk about taxation and regulations. There are several regulations that we are seeing governments all over the world implementing to facilitate and to manage the cross-border payments process. For example, in Nigeria, they've put a number of import restrictions. That means there are some things that if you import into the country, you may not be able to get foreign exchange. And they have listed some of all those items that you need to be aware of when you are doing an import in that country. There is also exchange control requirements, which means before you can make a cross-border payment, there are some forms that you need to fill, there's documentation that you need to provide, and most important is the availability of FX, because foreign currency is very scarce in some of our countries, and therefore before that payment can be made, you need to make sure that there's an FX can be allocated. Otherwise, you may have the Nigerian naira, but now you're looking for dollar or you're looking for euro to be able to send it out, and that can be a challenge if the foreign currency is not available. Then another country I've picked up here is Kenya. Again, in Kenya enacted a law on June 30th, 2020, which is in the Finance Act, and this act requires specific income tax measures relating to digital services to take effect from January the 1st of 2021. Now, I know I picked just two of the countries in Africa, but you find different regulations existing in the markets that you're doing business in. And therefore, it is very important before you engage in any trade, before you start exporting or importing from a country, it's just good to have an understanding of some of the regulations that you need to comply with. Otherwise, you can import something, and now it comes the time for you to make the payment, and you are stuck, or there's a delay, or it even ends up becoming very expensive because something you had not factored in all of a sudden has happened. And so these are just some of the few things that I've talked about. For example, this digital tax. For a long time, there was no tax on digital services. But now we are seeing government stepping in and imposing withholding tax on digital services, whether it's digital advertising or anything that is sold digitally. And there are many other such type of taxes that governments are introducing from time to time. So if you are going to be doing business in Africa and doing trade in the continent, we advise that you spend some time just to have an idea of the regulations that govern whatever you are doing. There are also some that are very product specific, again, depending on the nature of your business. So spend some time, understand what is really required. And I think this is where banks can be very helpful. As you all know, for us, EcoBank, we've got a presence in 33 countries in Africa. We've got one international branch in Paris. And part of the reason why we've made this investment in country presence, in having an in-country presence, is so that we can be able to then advise our clients effectively because of leveraging our local knowledge. When you're present in a country, you're regulated by the central bank in that country, and therefore you understand exactly what happened in that country. And so when it comes to cross-border payments, we can be able to advise you, we can be able to provide you the right necessary advice, we can be able to guide you and help you to make sure that the process or what you're doing is actually compliant with the law, and just help you to manage that process. I think that's one of the advantages that I see of having people on the ground that understand the local knowledge, that understand the local laws, that can be able to navigate all these things. And I think we are very happy to be able to help our clients, at least in 33 countries in Sub-Saharan Africa where we operate, and of course our international branch in Paris. So again, in summary, this slide, and I think it's very, very important. If you are doing business in Africa, it is important. I would advise you spend some time, familiarize yourself with some of the regulations that may be required for you to comply with in some of these markets that we operate in. Now, let me spend some time here and just talk about several terms you'll use being referenced. Some of them you've heard before, and many others you'll keep hearing as we go forward. I think the first one is SWIFT. I'll talk some bit of time around SWIFT. You've heard, send me my payment via SWIFT. What is SWIFT? I think I'll spend some few minutes explain that. What is CHIPS as well? CHIPS is another very common payment system in the United States of America. Same with Fedwire, and same with CHAPS, which is a UK payment system. So I'll spend some time just to explain what these terms refer to, and hopefully it shall be helpful as you do business in the region. So let me start with SWIFT. SWIFT actually is an acronym. It stands for Society for the Worldwide Interbank Financial Telecommunications. SWIFT was started up very early by banks because they wanted to facilitate payments among themselves. And as you know, it's not a settlement system. It's really a technology that enables clients to be advised of payment. Normally, the SWIFT is just a routing mechanism that provides that system where payment routing is advised. The direct account relationships are normally utilized between the sender and the receiver using the banks that are involved. So SWIFT is a system that links all banks globally, and therefore payment instructions can be delivered through that network. But at the end of the day, the value is supposed to be sitting with the bank, either the sender's bank or the beneficiary bank. Okay, so SWIFT is just a routing, a mechanism for advising payment. So SWIFT banks can be identified by either an 8 or 11 alphanumeric SWIFT address. Therefore, any bank that participates in the SWIFT network is required to have a unique SWIFT code that then is used to identify messages that are coming to that specific financial institution. It is a multi-currency system. That means all currencies globally can be supported through the SWIFT network. And the SWIFT relies on structured formats that are accepted worldwide. What SWIFT has done is that they have come up with what we call SWIFT standards. And therefore they have a format, a message that say, if you want to send a message to a bank for them to act on that instruction, to be able to debit an account and make a payment, then you need to structure the message with the following fields. And they give you specific field formats that must be complied with for the other bank to be able to interpret that message and be able to act. And then over time, what banks have done, they have been able to automate that whole process so that the payment processing actually happens straight through without anybody having to manually intervene. Another key feature of SWIFT is that it's available 24 hours a day, 7 days a week. That means the platform never goes down. All banks remain connected. Of course, it's subject to the cutoff times for your respective countries, but the platform itself is available 24 hours, 7 days a week. It's been a very reliable platform. Swift has ever really been down. It's been reliable. I think it has served the financial services industry quite well. And today, without Swift, I think the world would come to a standstill. But that is really the only available method of moving value across the world and across all the countries. It's quite fast. It's point to point anywhere in the network, and many times the transaction can be delivered in less than 30 seconds. That means from one financial institution to the other, they get the message. Now, of course, once they receive the message, how long they take to act on the message, that is dependent on the financial institution. But generally speaking, within 30 seconds, that payment instruction is delivered to the bank. It is a fairly secure system. There are several authentication processes and encryption that is adhered to in financial institutions to ensure it remains a fairly swift and robust platform for exchange of financial messages. So that is Swift, and I think you may have heard Swift a lot, as I thought it's important just to make sure I break it down for you to make it easy for you to understand. And therefore, it's important to understand if you are going to make a payment between one country to another, even sometimes within the country, but from one bank to another, most likely it's going to be using the Swift rails for that message instruction to be delivered and for value and settlement to happen thereafter. Now let's move into chips as well. Again, this is another payment system. It's a real-time payment system that settles funds on a net basis with the participating banks. The system is privately owned and is managed by member banks of the New York Clearinghouse. Again, CHIPS is an acronym. It stands for Clearinghouse Interbank Payment System. And therefore, this is a private system that's owned by several banks that are members, and therefore they have a way of exchanging information in New York. It's a proprietary system owned and managed by its members, 11 New York City banks and the New York Clearing Association. It was established in 1853 and settling an average of $1.6 trillion a day in around 350,000 interbank payments. So again, it's a very heavily used system. The system conceived specifically to handle international payments, thus eliminating the need for checks as a payment, and comprises of 50 member banks and over 140 participants. So you can see it's got a long history. It started up established in 1853. It survived over the period of time. And again, it's a very, very heavily used platform. I think it's important for you, to understand how it works, the timings involved, the cutoff times, the settlement process that is involved in handling chips. Again, we don't want you to be an expert in understanding chips, understanding how the bank settles, the third-party transfers, and all this, because this is something that banks normally provide for you. But we thought it's important just to have a good idea of what is chips, so that when you hear people talk about this payment is going to be made by chips, you can know it's actually the clearinghouse interbank payment system that is used in the US for settling of US dollars. In terms of just a quick summary and overview, is as the system, it was conceived specifically to handle international payments and therefore eliminated the need for checks as a payment mechanism. It comprises of 50 member banks and currently has around 140 participants. All the member banks that are participating in the CHIP system rely on what we call a CHIPS Universal Identification Number, which is a 6-digit number assigned by the New York Clearinghouse to clients of CHIPS participants. And then again, it's normally used to identify the beneficiary or the beneficiary bank in the payment, and remains unchanged regardless of the CHIPS participants. Same-day funds subject to final settlement. They are both a customer and a competitor of the Federal Reserve Fedwire system. So again, what's important with these clearing systems is to understand, first of all, is the settlement happening same day? How does it work? Who are the members? How is the message exchange? And again, I've talked about all these things. You have a CHIPS user ID. Settlement is happening. Funds settled daily, of course, subject to settlement, and it's actually a competitor of the Fedwire system. There are 20 settling banks, and the primary network is really the primary network for large value domestic and international US dollar payments. The market share of around 96%. So again, it's a very, very important settlement system for dollars in the US. And I think it's good for you just to have an appreciation of what CHIPS is all about. Let's now then shift to the Fed system. Again, the Fedwire system owned and operated by the United States Federal Reserve Bank, and it was established in 1913. That's the Fedwire. You'll hear it being referred to as the Fedwire system. It's a private telecommunication network and is the only true United Systems payment system. Each payment message is posted and settled immediately and is unconditional, and is divided into 12 districts governed by a district Federal Reserve Board. All banks must have a Fed routing number. Again, here, if you want to exchange messages using the Fedwire system, you are assigned what we call a Fed ABA number, which is a unique identifier code, to be able to receive messages, and it's open from 8 a.m. To 6:30 p.m. In terms of membership, it has got over 6,000 United States and non-United States banks. Offline members can also transact via telex or phone, even though, of course, now everybody is moving on to online. System, again, uses the ABA number for identification, and normally from a risk management perspective, it has got debit caps and, of course, a lot of encryption that's used to ensure that the messages being routed through the system are all safe. So that is really the Fedwire, the Fedwire system. Let me possibly just spend a few minutes here looking at a comparison between the chips and the Fedwire system, because you may ask, oh yeah, they're all US clearing systems. What's the difference between the two? This slide just summarizes that. The chips payment system differs from the Fedwire payment system in 3 key ways. Number one, it's privately owned, whereas the Fed is part of a regulatory body. So the chips is owned by private banks, and the Fed is, on the other hand, the Fedwire system is owned by the government, by a regulatory body. The chip system is comprised of 50 member participants with 26,895 current active FD ABA numbers. That's the Fedwire system, and uses a sophisticated algorithm to match a net payment between participants, which settle on a near real-time basis. And the netting engine consolidates all the pending payments into fewer single nettable transactions. So I think it's important to understand, just the difference between those two in terms of how the settlement is happening in the background. Participants are advised by chips of a designated pre-funding amount, which must be credited to chips account, the chips account. So within the chip system, there's pre-funding, and this pre-funding amount effectively becomes the participant's margin to support netting via the algorithm. And the total of the pre-funding amount for all participants is $3 billion, which supports all of that day's settlement. So again, as you can imagine, the dollar is one of the most heavily traded currencies, and therefore this chip system and Fedwire systems are heavily utilized. And therefore, it's just important to understand the difference between the two, as you do business. And therefore, because of what we described here in terms of the settlement process, CHIPS offers a very cost-effective and efficient use of intraday liquidity to support their settlements. So if you look at the Fedwire system and the CHIPS system is actually fairly cost-effective because of how they manage the liquidity on a day-to-day basis to ensure that you don't have to put so much margin to settle your transactions. So if you extrapolate that in terms of the comparison of chips and Fedwire, both of them, payment is a revocable one and instruction is made. The payment is reversible. In chip system, yes, you can reverse a payment. Fedwire system, you can't reverse the payment. For chip settlement, they use net settlement. In the Fedwire system, no. And that, again, I've explained the whole idea around net settlement, because then if you use net settlement, it means today there are people paying you and you're also making a payment. And at the end of the day, you settle the net position. That means the liquidity that you need to be able to support the chip system is far less than the liquidity that you need to be able to support the Fedwire system. And again, of course, payments are provisional. Is in the chip system. In the Fedwire system, no. Funds are available on the same day. That is true for both of them. And when you look at when final payment occurs, which is important, the final payment occurs when net settlement is completed on same day, normally by 6 p.m. That's for the chip system. And for the Fedwire, when individual transaction is executed on the same day. So we've talked about Fedwire system, we've talked about the SWIFT system, we've talked about the chip system. Again, in the United States, messages are routed through the payment system based on instructions contained in the payment. Therefore, if the SWIFT code is provided, if a bank is initiating a payment and they provide a SWIFT code, then the corresponding bank will choose the payment system based on a logic. Okay, if it's a book transfer, that means it's settling within the same bank. If it's not settling within the same bank, it's routed through the chip system. Otherwise, it's sent through the Fedwire system. The logic that's applied by most banks when they're deciding, do they route the payment through chips, do they route it through Fedwire. If a chips UID is provided, then the payments are made via chips. So again, if a bank is initiating a payment and you use SWIFT, you provide a SWIFT code. The bank on the other side that is initiating the payment, which is basically the dollar correspondent bank, needs to decide, okay, now I've gotten a payment here. Do I route it through chips or do I use through Fedwire? Now, the first thing that, of course, that bank tries to do is to check if this payment is coming to a beneficiary who has an account with that bank. If then that is the case, that transaction is settled as a book transfer. If not, it's routed through chips. Otherwise, it's routed through the Fedwire. But if a chips UID is provided, then that payment is automatically routed through the chips ID. If a Fedwire routing is provided for payments over $10 million, they will go through the Fedwire system. And if the payment is under that value, it is sent through the chip system if the beneficiary is a chips participant. So this is all logic that has been built in most of the global bank systems to be able to know how to route a particular payment, first of all ensuring efficiency, which is basically speed of processing, but also accuracy and also reducing cost of the payment instruction. Now, let's talk about source of financing and bottlenecks. I think we've talked about payments, we talked about SWIFT, we talked about chips UID, we talked about all these payment gateways. But at the end of the day, if you're doing business, financing is very important. You have to be able to find a way of getting your business financed and to be able to execute that export. You've got a big tender that you need to fulfill and you don't have money, you don't have financing. And so I thought I should spend a few moments and just talk about the sources of financing and some of the challenges that you may find along. So the first source of financing, of course, is development finance institutions. We've got many of this, the Africa Development Bank, Exim Bank. There are many development banks across, scattered all over the place. But the problem with that, with development finance institutions, is that they are not always easily accessible. Yeah, they have a lot of money, but they are not on the street corner. They're not near you, and therefore, they really can't help you that much if you are just a small and medium enterprise business or your company is small. They tend to cater for large ticket transactions, and therefore they look for big ticket projects. They're building a road from Johannesburg all the way to Cairo. Then you find the African Development Bank coming in very quickly and wanting to finance something like that. So they look for large ticket transactions. They're selective in the types of projects they finance. Some of them will be looking at environmentally friendly projects. They're looking at projects that expand or pursue the agenda of the countries that own the development financial institution. So there are several things that they consider in deciding whether to pick up a project. There are some that are focused on energy. There are some that are focused on just roads. There are some that are focused on rail. There are some of them that are focused on wind energy. There are some that are focused on oil and extraction. So you find they've got different types of focus, again, depending on the mission that the development financial institution has got. The second place you can get funding, of course, is commercial banks. Commercial banks are all over. Every country has got a financial system. You've got a central bank that regulates commercial banks, and commercial banks are all over the place in every country, and they tend to be nearest to most, to you as a customer. Now, when it comes to commercial banks, there are one of the things that they will be interested in is, of course, collateral. If they are going to give you money, they just want to make sure that they're going to get paid. They want to make sure that if they lend you money, that money is going to come back. And so you'll hear them talk about collateral. They'll ask you, okay, fine, I'm happy to give you money, but do you have something? What can I hold in the event that you cannot be able to pay me back? How can I get back my money? So you hear the words collateral or security being floated around very much. And all the bank is trying to say is that, listen, I'm happy to lend you money, but just in the event something goes wrong and you cannot pay me back, what recourse do I have? So they ask for collateral, they ask for security. The other thing that you also think about when you talk about financing in this part of the world is interest rates. Interest rates can be high. Okay, sometimes they are double digits. I've seen interest rates go all the way to around 30-40% in my 27 years career here. There was a time, I think when I started the banking industry, there was a time when interest rates were over 45%. And that's how high interest rates can go, especially when you have got inflation going on. And therefore, it's so important to understand that when you take the loan, there's going to be a repayment, and that repayment will be, come with interest, and interest will keep changing from time to time. So you need to have that in the back of your mind. And then another thing that's important with commercial banks is rigorous due to steep regulatory requirements. Central bank, commercial banks are required to adhere to what you call, minimum standards when it comes to lending. And so they are required as part of regulation to make sure they are doing due diligence before they give you a facility, before they give you a loan. They make sure there's loan documentation. There are all of things, KYC. There are a lot of things that they're required to do to make sure that before they finance you, they've crossed all the T's and in every way possible, so that they don't then attract regulatory fines and the rest. So again, commercial banks, they are near you, they are very close to you, and they'll be a very good source of financing for your business. And then there are also other, what you call other sources of funding, and they can have very high interest rates. You've got private equity, people that can come in and invest in your business, give you financing. They tend to demand a lot. Most of them will demand control or ownership of your company. So, for example, if you want money to expand, they tell you, we're happy to give you the money. But in addition, you have to give us 30% of your company. And not only do we need 30%, we also come in to sit in the company, and we'll provide you the CFO, or we'll make sure the MD is from us. So they also come in very high interest rates. They want a lot of things. They want to be involved in the company because at the end of the day, they want to make sure they get their money back. And that's why they insist on having a stake in the company and sitting in the board and sitting in the management to make sure that they can oversee their interests as the business continues. Again, the financing available may be inadequate to support projects. It's not always that the financing will be enough, but again, it is there. When it's there, the interest rates can be high, and they may have a huge demand on terms of management and control and oversight. So again, very useful, idea is to let you know where you can get financing. It can either be from a DFI, as we call them, development finance institutions, or from a commercial bank, or from other sources of funding. These are what is really available, today for ordinary people. Now, for us, within EcoBank, having talked about all that, we are, as I said, a Pan-African banking institution. This institution was created from the word go. It was created by shareholders that envisioned a bank that would be able to deliver first-class banking services or global banking services in Africa. And ensuring that the banking service that we provide is at par with what other developed countries are able to enjoy. And so from the word go, the bank was established without borders. Shareholders didn't envision a bank of a specific country. They wanted a Pan-African bank from the word go. And that's why the bank has actually expanded so rapidly to be able to cover that 3 countries in Africa, because that was really the mission of our shareholders, the vision that they had of one Africa where there's no border when it comes to trade, when it comes to facilitating intra-Africa trade. They envisioned an Africa without borders right from the inception. And it's so good to see some of these things coming to fruition during, when some of our shareholders are still alive, to see this thing coming actually to fruition. And so the bank has over the years invested in a number of things. First of all, in the countries that we operate in, we provide all services. We support, corporate clients, which is the big, the large corporates, multinational clients in each of the countries we operate in. Also, the small and medium enterprises, we are there, we support them. And even on individual level, we also support individuals who are doing business. So in each of our markets, we've not said, we'll only do corporate banking here, or we'll only provide this. No, we provide comprehensive wholesale banking services in each of the markets that we operate in. And that's something that we are very proud of. And that means that if you are doing business in Africa, you can walk to the nearest EcoBank branch, and there'll be people that will be able to talk to you, whether you are an individual that just wants to, who are sole proprietor business, or you are a small and medium enterprise, or you are a large corporate in that country, or even a multinational client that is doing business in each of those markets. You can walk to any EcoBank branch, and you'll be assured that they'll be able to listen to you and be able to help you and provide you with tools that will be able to help you. What we have done is to ensure that we have got relevant products to meet the operating requirements of our clients. Whether you just want to get paid, you have exported goods, you want to get paid. Again, leveraging our products, we are able to provide you with tools to enable you to get paid seamlessly from whatever you have exported your goods to. Then, if you're having a shortfall and you need financing as well, there are several financing tools that we've got. We provide overdrafts, which is basically ensuring that if you have a mismatch between your collections and your payables, we provide you overdraft facilities to be able to help you navigate that. Or we do what we call supplier financing, tools. You have supplied goods to, to a big multinational client, and they take you 60 days to pay you. Within those 6 days, you can come to EcoBank, and we have a structure where we can be able to pay you upfront and wait for the money to come in from the client that you supplied goods to. Some of them could be government, maybe trading with government as well, and you have provided goods and services. They have accepted an invoice. They know they're going to get paid. And in some of our countries where the law allows, we've been able to facilitate and be able to pay them upfront while we wait for the payment to come, to come through. The other thing that we also do is called what we call distributor financing. You are doing distribution for a big multinational client. You want to be able to buy more goods and sell more. Again, we as EcoBank step in there. We're able to provide you with a facility that enables you to sell more of the service of the products that you have been appointed to distribute. And and again, that makes it very easy. When it comes to our small and medium enterprises, we've got technology, digital technology, our digital products. For example, you can be able to go online, you can generate a QR code and send to someone, and they pay you instant. They can use that to pay you. With us using our product, we call it EcoBank Pay. But generally, an account where you can generate a QR code that's linked to your account at EcoBank, you send it to whoever is supposed to pay you. They just scan the code and they pay you, and that solution is available across all our countries. And we have then, of course, our payable tools, which is our Omni Plus platform, or Omni Lite, depending on which version you want to use. If you're a small, medium enterprise, these two tools enable you to be able to pay anyone, whether it's domestic or cross-border, online from your offices. If you want to pay for salaries, for example, you've got a huge number of employees that you want to pay, you can be able to leverage the Omni platform to be able to upload a huge payment file of salaries, send it to the bank. Confidentiality is observed, and that payment is routed to all your employees. We have also done integration to mobile network operators to ensure that if there are beneficiaries who have accounts with mobile that have got mobile wallets, we can be able to send the payments as well directly there. So EcoBank has, over the last couple of years, invested in a lot of technology. All our systems are connected. You come to us through one location. We make that available to you in 33 countries in Africa. And therefore, all these tools is available to you, is live, and you can leverage our technology to be able to run your business, whether it's from a payments perspective, whether it's a collection perspective, or even from a lending perspective. One of the things we are very proud of course, is our intra-Africa collections platform, where, let's say, for example, in the Wemwa region, you are doing business in Senegal, and you're exporting to Mali, and the person in Mali can actually be able to pay you directly in Senegal, leveraging, again, our intra-regional collections. Or you are exported and you have a beneficiary or someone in Togo, and your account is in Senegal or Mali or Cote d'Ivoire, and they can be able to pay seamlessly. We call that our intra-regional collection system that's available and helping a lot of clients, whether it's in cement or in distribution or in FMCG sectors. These are all tools that our clients are really enjoying, and we're very happy and very proud as EcoBank to be able to have these tools, make these tools available to Africans, to be able to use them to do business in Africa. It's something that we are very, very proud of, part of our core mission. So in terms of trade financing, I've talked about some of these things, whether it is just the straightforward issuance of letters of credit, whether they are confirmed or unconfirmed, or avalanche bills, or even documentary collections. We have all these products available and also delivered electronically. You can be able to initiate your letters of credit online using our EcoBank Omni platform. And then, of course, when it comes to direct facilities, we provide loans and advances in both local currency and foreign currency, depending on your requirements or depending on your business. And then, of course, when it comes to issuance of guarantees, whether you are doing a project and you want a guarantee issued or you want a performance bond issued, these are things that we provide across all our networks. When it comes to export, we provide pre-shipment financing. That you are exporting tea or something like that, you can come to us. We're able to provide you a facility that enables you to ship, so that when finally the beneficiary receives the goods and pays you, you come and liquidate your facility. Or what we call post-shipment financing, export and warehouse receipt discounting. These are all things that our commodity finance team do very well, and would encourage you to get in touch with the nearest EcoBank branch, and you'll be helped. And of course, digital lending, which is basically our electronic financial supply chain. I've talked about that, and advances against digital collection. These are all tools that we have deployed to be able to enable SMEs to be able to grow and be able to take advantage of the trade opportunities that exist in Africa. Now, of course, when it comes to sourcing financing, there are several things that you need to be aware of. I've alluded to some of these things. The banks want to make sure the project is feasible. They look at the equity that's in the company. If it's an equity, if it's a big company, they want to know how much shareholders are put into the company. They would be interested in collateral to support the financing. They would want to know about your credit history. How has been your credit history? Have you borrowed before and repaid? These are all things that help in arriving at a credit decision. They also are keen on a viable business model. You'll hear banks asking you, can you give me a business plan? The reason why they are doing that is they want to make sure that the business model is viable, and it's good for banks because then they can be able to correct you. They can be able to help you shape it and make sure that what you are doing is viable. Because remember we deal with all types of clients. We see a lot of things. There's a lot of experience, a lot of expertise within the bank. People that are industry specialists that can be able to work with you and be able to help you, ensure that you've got the right business model. And then, of course, good corporate governance is important. We are living at a time of transparency. Therefore, we want to make sure there's separation of functions so that when you get financing, that there's accountability. The money goes to the project that is expected for, and the money is not diverted to other things. These are all things that financial institutions will take into consideration when approving a financing. Now, I cannot finish this presentation. We talk about Africa Free Trade Agreement. I think after which is, I think, is something that is timely and something that we are so sort of proud of as EcoBank here. For a bank that was started off as a Pan-African bank where the shareholders envision trade moving freely across borders, I think the birth of this Continental Free Trade Agreement, I think is so timely because we think it's going to open up Africa. There are a lot of benefits having a unified continental market. Europe have organized themselves. They talk about a single European market. The Americans have got their own market. The Japanese have got their own market. China have got their own market. I think it's timely for us as Africa to also have our own common market that we are proud of, that we can facilitate and grow together. And so as we start seeing, free movement of goods as it evolves, and there's free movement of goods, I think we can only expect there's going to be a lot of intra-Africa partnerships that are going to come in, so that, if you have a cement plant in Nigeria and you're making cement, you can be able to access all the countries that are surrounding you there, and therefore we expect that to bring a lot of competition, lower the cost of doing business, make goods more cheaper and affordable, and therefore be able to help stimulate growth in Africa. So I think it is something that's very exciting when we look at what the ECOWAS group of countries have done. When you look at the COMESA, the SADC, the East African Community, we are seeing Africans coming together, and I think it can only be for the good of the continent as we trade more, facilitate trade, get to know each other better, and I think Africa, the future of Africa is really bright. I think I can't really finish this presentation without talk about risk management, because if there's one thing that we are very passionate about as a bank is to help you manage risk. We want to make sure that when you trade in the continent, you understand the risks that are involved, and therefore risk management is critical, because if you just have one misstep, you can wipe away your capital and you can be out of business. And so I thought I should just mention the way we look at it, at risk from a banker's perspective. The first risk that we look at from a banking perspective is credit risk, and credit risk is really the loss due to borrower default. For example, as a bank, we lend you money, and then something happens. It could be a situation unforeseen circumstance. For example, now we've just come out of COVID-19. You had borrowed money. You thought everything was well lined up. And then COVID-19 came in, and bang, your factory cannot produce. And therefore now you need, you can't repay the loan. That is a credit risk, the loss due to default. And that default could be for many, many reasons. If the business failed, or you didn't take off, or it was a wrong product. That's what is called credit risk. And if you are doing business, the same way that we as a bank look at risk, you need to start looking at it like that. You are trading you are in Kenya, exporting to a person in Ethiopia. You have to think about, what if he doesn't pay me? What if I send him the goods and he doesn't pay me? What happens? What's going to happen? That is credit risk, and you must think like that always. You must think risk when you are doing business. You can't work on just trust. No. You have to think about what is the worst that can be able to happen. And I think looking at it from a banker's point of view, I think it's worth looking at it. The second risk that we look at from the banking perspective is operational risk. And operational risk here is really the loss due to inadequate internal or process controls, where you can actually lose money. because you didn't have enough internal process or internal controls. And so from a banking point of view, we're always very concerned around how do we handle transaction processing, how do we ensure there's maker, checker controls embedded in everything that we do so that there's no fraud risk. And it's the same thing for you as well. If you're trading, you're exporting, you're doing whatever, you have to think about, hey, what could happen if I export the goods and then they reach a border somewhere and they're stuck there for 24 hours and they're perishable? That's an operational issue. Normally, you would cross the border within 24 hours. That's okay. But this day, what happens if the border is closed and it takes you 2 weeks to cross and the things inside the container are perishable? Again, that's an operational risk that you need to think through if you're doing business, and always think through what can go wrong. Because if you don't think about what can go wrong, the day it goes wrong, you may be in trouble. So we encourage our clients to think risk, because remember, when you are protected, even us as a bank, you are protected. When you don't think risk and the risk crystallizes, even as we get exposed, especially if we have advanced you funds or we have a structure that we put in place for you. And then the third risk that we think about as a bank is what we call reputational risk. And this is really the loss due to negative headlines. You've done business with someone, and then tomorrow you find that he's in the news because he was accused of corruption. And the very transaction that you're involved in thinking it's a clean transaction, it turns out that this is a huge corruption scandal in the country, and you're in the newspapers, on the headlines, and you handled that transaction. We've seen that happen in a number of countries where several banks have been involved in transactions that involved third parties that were involved in corruption. They were taking money from the government, and eventually the anti-corruption authorities catch up with them, and bang, it is in the news. And then as a bank, you are there in the headlines that this money was coming to you. People were withdrawing this money from your bank. And the reputational risk, the damage it does to your credibility as a financial institution is so bad. So we worry about that as a bank, as a financial institution that is doing business across the 3 countries in Africa, plus 1 in Paris, regulated by several central banks. As EcoBank, we worry about that. And therefore, we've taken several measures to make sure that the people that we are dealing with, we know them. We do a lot of due diligence to ensure that we know who you are. If it's a company, we want to know who are the shareholders. We want to drill down to 10% to make sure that we understand who you are. We look at headlines, we look at negative media, we look at all the things before we make a decision on whether to work with you or not to work with you. And this is important. And again, for you as the clients, as people doing business, it's so important to think like this. When you get a counterparty on the other side and you're trading with them, do your due diligence, do your homework, call a few people, find out, whether there's anything you know about that person. Don't be, because it's a big deal, don't rush. You could end up being dragged into court as a witness in a transaction that you thought was just a good transaction. So reputational risk is very bad, is very, very big, and you don't want to be in the newspapers for the wrong reasons. So think reputation. Every time you have a contract, don't just look at the contract amount. Look at who are the parties involved here. How did they get the contract? Was it awarded in a clean way? Is it clean? Do your due diligence. Ask several people. Do your own investigation to make sure that you are comfortable that this is something that's clean and you don't end up in the newspapers for the wrong reasons. We encourage our clients to do that as well. Because remember, again, when you are safe, even us, we are all safe in the industry. The fourth risk that we look at as a bank is market risk. And this is important, is the loss caused by change in the market. Something happens in the market and bang, there's something has happened. The FX rate, exchange rate has moved from, by 40% in either way, in other direction. Wow. Remember, you had brought in your product, at a particular exchange rate, you paid in foreign currency, and now you're coming to sell locally. And by the time you go and sell that product, you know what? The exchange rate has moved. And you either increase your price. If you increase your price, you can't get somebody buying, and then you're stuck with the product. And when you finish selling the product, you may not even be able to have the funds to go and import again. So market risk is very important. And many times, people ignore this. But we want our clients to be aware. You have to think about the exchange rate risk. You have to think about the interest rate risk. These are all risks that can come in, that happens sometimes also because of new regulation. A regulation comes in that just makes the market completely different. So market risk is important. We think about it as a bank. We want to encourage you as our clients, and as a person that is doing business in Africa, we want you to think about market risk. And that will inform you, for example, taking some, risk mitigation products, maybe, hedge your taking a hedge, an edge over on foreign currency hedge, to protect yourself. Again, this is why, customers end up taking those instruments, because you're trying to make sure that in the event that the risk crystallizes, you're not exposed. And of course, let me finish by saying legal risk. Legal risk is the loss due to inability to enforce contractual obligations. You have done an export, and something has happened, and then the person has failed to deliver, and now you go to court, and you can't enforce. Why? Because you didn't think through the contract. You did not think through the legal agreement. You didn't think through stating exactly who is responsible for what. And so we as a bank, we worry a lot about legal risk. And that's why sometimes banks have been accused as being too documentation heavy. But we want to make sure that anything that we are doing, in the event something goes wrong, we can go to court and we can be able to enforce our positions, or we can be able to enforce our contractual obligations. And it protects both parties. And we also encourage you, as much as a bank, we think about legal risk. It's also important for you, if you're doing business in Africa, think about the legal risk. Always make sure you have a contract. Don't draft the contract yourself. Engage a lawyer. There are many legal firms that can assist you. Some of them that are doing business across several countries in Africa. Engage them. Let them draft an agreement for you. Get the agreement reviewed, drafted. Give your counterparty to review. Make sure you have an agreement. Then now start doing business. Don't rush. Some of these things, you rush and ignore them, they can come to bite you. And when something goes wrong, it can really go wrong. Like, for example, with this COVID-19, there are a lot of companies that have suffered because no one, of course, saw COVID-19 coming in. But then COVID came in and everybody could not trade, and people were locked up and at home. I said, listen, I can't deliver. And now if you didn't have an agreement that looked at what will happen if something like COVID came in, you have nowhere to go. And yet you have given your goods and services, or you have rented your house and you didn't have a lease agreement signed. And then someone is saying, now there's COVID-19, I can't pay you my rent. You need to have had a proper lease agreement that actually has foreseen an event like that one that says, in the event that this happens, this is what is supposed to be done. So it protects you. We worry about it as a bank, and we encourage all our clients and clients that are doing business in Africa to also think about legal risk. It's a very, very important thing. Again, as I said, make use of investigative firms that cover Africa. There's a lot of due diligence reports being provided. Speak to competitors, find out if you're doing a business, speak to competitors, get as much information as you can. I've talked about the importance of boots on the ground. They make a big difference. That's why EcoBank is present in 33 countries. When we give you a position on what's happening in Cameroon, it's because we have a team on the ground that tells us what happens. When you want to know what's happening in the Central African Republic, we have people on the ground that can tell you up to date, up to the minute information on the political situation, the economic situation, what is happening in that country. When we talk about Cape Verde, we have a branch in Cape Verde, so we can tell you exactly what is happening in Cape Verde. If we talk about Sao Tome and Principe, we have a branch on the ground, people there and tell us what is happening. If it's Nigeria, we are on the ground. We have branches all over that country. We can tell you exactly what is happening in Abuja, what's happening in Lagos, what is happening in Kano, what's happening in Kaduna. We can tell you exactly what is happening. If it's in Kenya, we are all over the place. We can tell you. Boots on the ground, they help you to be able to navigate, what's happening. And I think for us, if you are now, let's say, for example, you're in Kenya doing business in Uganda, is an EcoBank branch in Kenya, an EcoBank branch in Uganda. And we believe that because we have that on the ground and understanding, we can really be helpful to you and your business. And of course, speak to rating agencies. There are a lot of rating agencies that give on a daily, country reviews. Speak to them, get to read this information. If you're doing business in Africa, be informed. And being informed is read documents, read these economist reviews, understand what is happening, because you cannot blame ignorance. When things go wrong, they really go wrong. And of course, keep a very close eye on management. If it's a company you're dealing with, unexpected, frequent management changes, you need to be aware of. When you hear, there's a management has changed, you need to change to understand why. Why has the management happened? What went wrong? Was there a governance issue? The MD, the CEO was just appointed in January. Within 6 months, the CEO has been fired. Then they bring another one, he's fired again. Then you start knowing, hey, there's a problem in that company, or there could be a problem there. There could be a governance issue there. Why is there such a high turnover of management? If it's a family-controlled business, think about succession planning. If it's a family, what happens if the person that's promoted the business is not there tomorrow? What happens? Do they start fighting for the assets? So you need to be careful and understand, who you are dealing with on the other side. Be alert again when expansion is always quite challenged when you hear, management is going to new countries, new segments, new products, new countries. It's a good thing, but you know what? Things can go wrong. So if you're trading with that company, you're dealing with them, you have to be very careful. And of course, when the firm starts being aggressive and expanding aggressively, you have to be very careful. These are all just a few risk management things that I thought I should just throw out there. We think about them as a bank, every day. And it's also important for you to be able to, to think through them. So anyway, so that's really it. What I wanted to cover. I know I've covered quite a lot, but I remain available to respond to your questions. As I said, as EcoBank, we're very proud to be here to serve Africa and to have a bank that you can be able to connect in one location and you get access to the 3 countries, whether you are a fintech that's launching a new product, whether you're an entrepreneur wanting to do business in Africa, or whether you're a multinational client that's wanting to do business in Africa, or you're just a regional client wanting to do business in Africa. We provide you that one connection to give you the 3 countries in one go, leveraging technology for you to be able to originate, initiate transactions, for you to be able to run your business well. And therefore, if you're looking for a banking partner, I think EcoBank is an ideal partner, and we'll encourage you to contact us in either the nearest EcoBank branch in the country that you are present in, or go to our website and make the connection there. We remain available to be able to ask any questions. So thank you very much, and best wishes as you do business in Africa. Thank you.